Hello and welcome to the Cafe Mutual YouTube channel. As we all know, the mutual fund industry has continued to expand, and along with this expansion, there have been many new NFOs, around 20 of them in this month alone. Today, we'll be joined by Anupam Tiwari, Head of Equity and Fund Manager of the recent Groww Multi Cap Fund. So, we'll get his opinions on mutual fund trends and more. So, Mr. Tiwari, of late, equity markets have turned quite volatile. FIIs are exiting and geopolitical tensions have added. In such a scenario, what is your outlook on equity markets?
Yeah, hi Suhail. Thanks a lot for inviting us here. Um, See, from a medium to long-term perspective, we are pretty positive on Indian equity market. Of course, we are seeing volatility as of now, which is kind of culmination of lot of factors coming together. What we have seen is Q2 earnings have been disappointing, and they have seen a downgrade. And if you look at pretty much broadly, the downgrades and market fall is kind of similar. So we have seen roughly 8-9% of downgrades on an average, and the market has also fallen by similar amount. At the same time, foreigners have been pretty overweight on India, and because China has been doing well since September last week. Of course, now that frenzy is kind of subsiding, so they were reallocating rebalancing portfolios, and that also resulted in some amount of selling that we are still seeing in the market. But this aside, uh, I believe that in terms of medium to long term prospects, we are in a good shape. Uh, Banking system is in good shape, so capital is available. Markets are doing well, so risk capital is being available. In terms of government spending, that has been a slightly problematic for last 2 quarters, declined by 15% almost. But I think it can be caught up in rest of the 2 quarters for the fiscal year. So then we will be again on a growth path mode. So yeah, from a medium to long term perspective, I see great opportunities in Indian market.
All right. And from a valuation point of view, how do you see how comfortable are you with the valuations across market capitalization?
So yes, let's say up to September, their market has gone up significantly a bit ahead of fundamentals, and that is what we have seen the adjustment happening, as I said. So yes, everything is not cheap or everything is not attractive, but there are reasonable valuation pockets, and there are pockets which are exorbitantly valued. So if one look at carefully, there are opportunities, and if you kind of um look at the potential growth which can happen in next, let's say, 5-7 years, then there are certainly good opportunities available. What happens in market is that every past fall looks like an opportunity, and every next fall looks like a risk, right? And that's what is kind of playing out right now, because market has not seen this kind of correction in a long while, and hence along with data, FI selling, market fall, etc., it's kind of causing bit of confusion among investors. But I think one should be disciplined, continue to follow his investment plan or his overall asset allocation plan, and keep on investing.
All right. And do you see chances of correction going forward?
Yes, see, correction is always a probability. Market can react negatively to a lot of things, and now third quarter results would be very, very important and very keenly watched. And then what happens with Trump taking uh, president's role in US and what he does, that would also matter a lot. What happens? Dollar has been appreciating, so emerging market kind of gets into a pressure because of that. So in short term, yes, there could be a further fall, but as we know that equity is a long term asset class, and you need to have a very longer term time horizon. History has proven that if you have a longer term time horizon, short term pains, volatility, etc., is already taken care of.
All right. So that's your outlook. But let's get into the multi-cap fund. Groww has recently launched this, and what's the rationale behind this launch?
So the rationale behind this is that we believe this is one of the most appropriate fund for any investor. So this should be like form the core of any investor's mutual fund portfolio. And then alongside on top of it, he should build layer of niche funds like mid cap, small cap, or thematic funds, etc., depending on his risk appetite. But this is one fund where he gets allocation across market cap category, small cap, mid cap, and large cap. So he doesn't need to make too many investment decisions. What we have seen is that making too many investment decisions causes a lot of errors for an investor, especially allocation errors. Allocation has been the biggest mistake of investors over last 15-20 years, especially in Indian mutual fund industry. Either people have not rightly allocated, they have got overly allocated to some segment, or they have not allocated enough in equities, right? So this is one fund where you don't need to make too many decisions. You need to make simply one decision, and automatically allocation happens, and there is a minimum assured allocation. So it's a very disciplined strategy. And the second thing is that when at individual level you allocate among large cap, mid cap, small cap, and then rebalance over, let's say, years, because you have to rebalance your portfolios, etc., then there could be tax implications. Whereas in this fund, you will have within a single scheme, we would be relocating or changing bit of composition. So then the tax implications are not there from that rebalancing perspective. So these are two benefits. And third benefit is you get allocation to all the market caps in a very logical manner, evened out manner. So what we are seeing is that as Indian economy is growing, as it is evolving, and hopefully at some point of time it will become an $8 trillion, $8 or $10 trillion economy, we will see opportunities across market caps. In fact, mid and small caps can see a slightly better opportunity of wealth creation. That's my personal belief that we will have more wealth creation opportunities in mid and small caps as compared to large caps, because a lot of new businesses will come in. And as per capita income grows for a lot of smaller businesses, the opportunity size increases and their scale of operation increases. Also, exports can be a great opportunity. A lot of people don't realize is that other than services, where large companies dominate, in manufacturing, actually, mid-sized companies are a larger player in terms of exports, exporting manufactured goods. So that's also now improving that prospect. So these are three benefits. One, disciplined allocation in a one single product. Number two, tax implications being favorable. And number three, that you get exposure across market cap categories, across opportunities.
So, I want to ask about your exposure. What approach will you be taking to building a multi-cap portfolio for this particular fund?
Yeah. So what we follow is something called QGAR, quality and growth at reasonable price. So why we invest, or let's say why we buy equities. So the objective of buying equities is to have compounding. You want higher compounding and you want longer compounding. That's the simple objective of buying an equity. So what are the factors that give you higher compounding and a longer compounding? And there are three factors which are very, very important. For higher compounding, you need growing companies or businesses which are scalable, as well as the management who is capable enough to capture those growth opportunities in a profitable manner. Then only shareholder create wealth through those companies, investing in those companies. So we want growth. We want companies which have a scalable business model, and we want capable management who can capture those growth opportunities. That is first part, growth. Then we need longer compounding. For longer compounding, you need to have basic minimum quality in the company. Quality has two aspects. One, the corporate governance or the integrity of the management. And number two is the balance sheet strength, the quality of earnings. So high ROE, good ROEs, good cash flows. Right. So these two things are our basic filter. So we first filter on quality, then we filter on growth prospects, and then we come to valuation. Valuation becomes important from a perspective of compounding a portfolio. So a business may compound, but if you don't get right valuation, then your portfolio may not compound. So to ensure that we are also compounding in our portfolio along with the businesses, you need to enter at a right valuation. So we are sensitive to valuation. In large caps, we deploy this QGAR philosophy on a top-down basis. So first we select sectors where we are seeing earning upgrades happening or potential for re-rating, which are generally driven by earning upgrade cycle. And then we select stocks, and then we size up the portfolio based on the growth, valuation, dynamics, etc. We would be agile in large caps. Uh, what we believe is that if we get the allocation right, selection part, even if we make some mistakes, it would be still be fine. Uh, so that's on that large cap side. On the top down basis, we would be very sensitive to valuation here. On the mid cap side and small cap side, we will apply bottom up approach of QGAR, because in mid and small cap companies, these companies are still evolving, their opportunities are still evolving. So analyzing them on a top down basis may have a different kind of connotation. So we want to analyze them on a bottom up basis, good quality management, good quality balance sheets, companies which are driving uh, good investment, good capital allocation towards growth. We would like to own them, and we would be lesser sensitive to valuation in mid and small cap. So we would be more like buy and hold, unlike large caps where we would be very agile and we would be shifting the portfolio based on earning upgrade downgrade cycle. In mid and small caps, we would be much more patient investor and much more buy and hold kind of investor. So this is how we are going to create portfolios for our multi-cap fund.
All right. And but getting back to the very concept of multi-cap funds, they're pretty similar to FlexiCap and ELSS. So, what additional benefits can investors get by investing in multi-caps that wouldn't be possible with FlexiCap and ELSS?
So the difference between ELSS and multi-cap is that the lock-in and the tax benefit, right? ELSS has a lock-in and it has a tax benefit. Multi-cap doesn't have that. So it doesn't have lock-in, it doesn't have tax benefit. And yes, you can run an ELSS like a multi-cap fund, because even in ELSS, there is no restriction. Uh, in a flexi cap, the rule says that you can go wherever you want. And that itself causes some issues with respect to market timing, that whether you are able to get into right segment of the market at an appropriate time or not. Then it depends fund manager's ability to time the market, etc. Whereas in multi-cap, you get an assured minimum allocation. And what I believe is that in long run, discipline pays off more than anything else. And time in the market is more important than timing the market. And as a fund manager, it also makes my life much easier because I need to have a minimum assured allocation towards these three segments. I personally believe that next 8 to 10 years, we are going to make more money in mid and small cap. And hence, having a minimum assured allocation helps both for fund manager and for the investor alike. So these are basic broad differences. In a flexi cap, you are taking a call on fund manager's ability to allocate. In a multi-cap, you know that there would be a minimum allocation assured.
All right. And for our final question, what makes Grow Multicap different from other multi-cap funds?
So I think there are two things that make us different, or that will make us different, that we will try to create the differentiation. One is our investment philosophy. QGAR, what I said is that we believe it is a very robust, a very sound investment philosophy, which will help us create wealth for our investors and create good sustainable returns, risk adjusted returns. That's one. Second, we want to be true to multi-cap, true to the label multi-cap fund. Generally, we have seen a lot of multi-cap kind of gravitate more towards large caps. So large cap allocation goes up significantly, whereas we will be kind of evened out, equal allocation on a default basis. And as and when opportunity arises, we would focus more towards mid and small cap. So this would be two differentiation for us.
All right, that makes sense. And that was it for my questions. But is there anything else you'd like to talk to our audience about? Anything you want to speak about?
So, I think we pretty much covered all the aspects. The only thing I would like to highlight to investors is that we believe this fund requires a minimum time horizon of 5 years. So you should invest only that part of money in this fund which you can set aside, keep aside for 5 years. If you want to invest for 2, 3 years, this product is not a suitable product for you. So that's what I would like to add.
All right. Uh, I'd like to thank you for taking part in our interview. And I would also like to thank the audience who has watched us on YouTube. Take care and have a great day at work.
Thank you, Soel. Thanks a lot.